Hi, and welcome to the Stockscores Market Minutes for June 13th, 2014. In this market, we find there are a lot of stocks in strong upward trends, and these stocks will tend to oscillate inside of a price channel. Now, if you want to buy one of these stocks, the best time to buy is when it is pulled back to the bottom of its channel. I'll show you this in a chart in just a moment. But what we don't want to do is chase the stock higher as it gets to the upper envelope of that upward sloping channel. At the same time, if you're looking for the sell point, you really only want to sell if the bottom envelope of the channel is broken, and this is really the upward trend line. Now let's take a look at a stock that I have been holding for some time. This is Alcoa, and you can see that it's in this very orderly upward price channel. Now there are times when the stock shows weakness and it pulls back toward the lower envelope, the red line that I have drawn, and at that point it is worth considering as a buy. Now in this particular case, over the last couple of weeks, Alcoa has been rising and it is approaching the top of its price channel. If you pay attention to the media, you'd see or hear lots of positive reports on Alcoa because it's doing well. And that is what causes people to chase these stocks higher. Well, it's better to look at them when they're showing weakness as long as the upward trend line, which I've drawn here in red, is not broken. All right, let's get into this week's market analysis, and we'll focus on price channels for most of these charts. Here's a daily chart of the S&P 500 ETF going back 6 months, and you can see, 8 months, and you can see that we're about in the middle of the upward price channel and have been pulling back for the last 3 or 4 days. That leaves a fair bit of downside until we get to that lower envelope, the green line on the chart, but we still also have a fair bit of upside. Now the weakness in the last few days partly caused by the tension in Iraq, and that could escalate into something bigger and cause people to be nervous, but until that upward sloping green trend line is broken, I remain bullish on the S&P 500. The Canadian market very similar, but in this case, because of the tension in the Middle East, which helps oil prices were up quite a lot, as were gold prices, and of course, the Canadian market has a heavy emphasis on these commodity-based stocks, and so here's a market that is now at the upper envelope of its price channel, and that makes buying this market here a little risky. You want to try and buy these markets when they're on sale, and now is not the time. Now, that's not to say you should avoid the market. It's a great looking trend, a great looking bull market in the TSX, but if you're looking for bargains, wait for the pullback. The TSX Venture has broken a downward trend line, and again, the rise in commodity prices really helps this market because, of course, the TSX Venture is heavily weighted with mining and energy stocks, and those sectors did well in the last couple of weeks, or I should say in the last week, and as a result, the TSX Venture is starting to come alive again. And so if you like to trade the junior, more speculative Canadian stocks, it may be time to give those a look. The Treasury bond market hit resistance at the top of its channel, and if we made this a really long-term chart, you would also see that it was at a very long-term downward trend line as the month of May came to a close. And if you've been watching this video on a weekly basis, you'll know that I called for a pullback in Treasuries. That is exactly what has happened. It has fallen down to the bottom envelope of that upward sloping channel. Now here we've got a little bit of conflict because in the short-term chart, which is the one we're looking at, it looks like the Treasury should bounce, and that's what they did Thursday and Friday. In the very long-term picture, however, we do have some long-term resistance at a much longer-term downward trend line. So we're at a kind of a critical point for Treasuries, and we want to keep an eye on this one. If that green line is broken, I think that the longer-term trend, which is negative for Treasuries, will continue to be negative. That means Treasury prices lower and interest rates higher. US dollar has been rising for the last 5 or 6 weeks. It is approaching its downward trend line, so coming into some resistance where we would expect that the US dollar strength would start to dissipate. But of course, if it breaks that red line, well, then the mood has been changed from slightly pessimistic to optimistic. The gold market had a pretty good week of trading this past week, but it has not broken that pessimistic red trend line. And here is another case where we've got a battle going on. The green line that I have drawn is actually part of a much longer term rising trend. We can draw that trend back 5 or 6 years. And so it has very strong support in around the 119, 120 level on the GLD. But at the same time, there's that short-term resistance at the red line that I've drawn. So you're seeing a little bit of a rally this week. Hopefully that is the base for gold to continue its very long-term upward trend. But until it can break that cycle of falling tops, which I've highlighted with the red line, I don't want to get too excited about gold, but certainly there are signs that this market is trying to turn for the better in the short term. Oil market broke out of its pennant pattern. We've been talking about this pattern for 2 years. It has been oscillating between the red and green line, but this week, because of the tension in Iraq, we've seen a breakout through that. Now, I'm always a little wary when markets break out because of a very unique event, because if that unique event goes away, the market tends to sell off very quickly. We saw that with the Libya situation a little over a year ago, and we're seeing it again here with Iraq. Now, that doesn't mean that oil can't surge a whole lot higher in the meantime, and I think you have to be bullish of this market right now, but at the same time realize that the strength can change very quickly if the issues, the violence in the Middle East go away. Fear index, a little bit of a jump this week because of the problems in the Middle East, but big picture stuff here. This market for fear is in a downward trend, and so we don't see a considerable amount of concern about the future. That in itself is a little bit worrisome. That shows that the market is a bit complacent, but until we start to see this bump up sharply, I'm not too concerned about a major correction in the stock market. So U.S. stocks, bullish long-term, neutral short-term. We are seeing some profit taking in the U.S. market. Canadian stocks bullish in both short and long-term. Short-term pushing up against the top of that channel, so we could see some profit taking next week. Gold neutral, it is at a very critical point where it's got this meeting of the trends. The short-term downward trend is meeting with the very long-term upward trend. We're going to get some resolution on that in the next month, I would expect. Oil bullish, but again, there's some political factors there, and so we have to be a little bit cautious with that bullish call. U.S. stocks found some selling pressure this past week, but remain in a long-term upward trend. The Canadian market is benefiting from higher commodity prices and is outperforming global markets. Gold is trying to hold that very long-term upward trend, while oil has broken out of an important pattern because of Middle East violence. Have a great week in the market and trade well.